Okay, thanks very much. Hello, everybody. Welcome to the webinar, today's presentation, which is How Smart Entrepreneurs Win. We have here today Steve Hoffman. He's the founder of FounderSpace. He's a published author. He's got a couple of very successful, popular books, Make Elephants Fly, and his new one coming out called Surviving a Startup. My name is Roger Royce. I'm the founder of the Royce Law Firm. We are soon to be Haynes & Boone, the international law firm, as soon as the shelter order comes off and we can move. But in the meantime, we're the Royce Law Firm with 30 lawyers based in Silicon Valley. And what we're going to do today is, this is a little different than some of the presentations and some of the panels that you've seen us do through idea to IPO in the past. Instead, what we're going to do today is just really a fireside chat. I'm going to have a conversation with Steve about the topic of how smart entrepreneurs win, and also maybe a little bit about what's going on in the market right now. So with that, Steve, I've given you a little bit of an introduction, but I think maybe it'd be useful if you could spend a couple of minutes just telling us a little bit about who you are and what you've done and what FounderSpace is up to.
Sure. Great to be here with you, Roger. Roger's a close friend of mine. We've collaborated together many times in the past, done many events together. Very happy to be here with all of you. And I am the chairman and CEO of FounderSpace. FounderSpace is an international startup incubator and accelerator. We have over 50 partners in 22 countries, so we work all over the world. Last year I spent around 70% of my time traveling. So I did lots of talks. I've been working with investors all over the world, and of course, working with entrepreneurs. And I'm also an author, as Roger mentioned. I have 2 books out right now. One is Make Elephants Fly, published by Hachette. And then my new one, Surviving a Startup, will come out soon, and that will be published by HarperCollins. And so I do a lot of work. I work with hundreds of startups every year all over the world, really going deep with them on their problems, on the issues they're facing, on how to overcome challenges and obstacles. And I'm very happy to be with Roger today and with all of you to begin to discuss that, to discuss what we're facing in the current economic climate, as well as in the days of COVID-19, where we're all of our businesses are being affected in one way or another, and especially startups. So when I work with startups, I know how tough it is. I have personally done 3 venture-funded startups in my life, and I've gone through all the ups and all the downs, so I know exactly what it's like when you hit a hard time and it seems the future is very uncertain and sometimes very bleak. I hope to help all of you with your questions. So please save up your questions, because as soon as Roger and I are done talking, we're going to open the questions up to you, so you can ask anything you want. And I've pretty much seen it all, so hopefully I'll have a good answer for you based on what I've seen worked and what I've seen not work so well, and from my own experience in the startup world. So in addition to that, if any of you are interested in venture funding, we have our own fund, a small fund for early stage startups. We also work with a lot of later stage funds, both here in Silicon Valley, as well as overseas. You know, we have offices in Australia, in China. We have partners all across Europe, and we work with them. So if you have a business plan, go to founderspace.com and click on investment and just submit the plan to us anytime. So Roger, that sort of sums it up for me. Why don't you take it away?
Okay, thanks. So one other housekeeping item you'll notice in your screen, probably should be at the bottom of your screen, there's a dialog box. There's a little icon that says Q&A. If you have questions, type your questions there. We're going to take them online. We'll save them up. As Steve says, we're going to talk for about an hour, and then until 1 o'clock, and then I'll go ahead and start taking the questions, and we'll do that until 1:30, but then we will be done at 1:30. So Steve, Well, let me just hit the big thing right away. It's not on our list. We didn't rehearse this, but let me ask you, these are really unprecedented times we're in. And what are you telling your startups to do right now? You might have heard, a few weeks ago, Sequoia issued their Black Swan memo, where they advised all of their portfolio companies. They said that COVID-19 was going to be the black swan of 2020, and we are already seeing sort of decreased sales, hit to cash flow. Companies already should start about hunkering down. Any special advice you have now that we're in a sheltering world for your startup companies?
I do. So just so you know, historically, I received Sequoia Capital's Black Swan memo back in 2008, 2009 crisis
Yeah.
when I was running a startup.
Oh,
And so I remember vividly the experience of getting that memo and being a CEO and having to deal with it. And instantly, we called a board meeting, and all of our investors, they said, cut costs. That was their number one thing. They're like, you have to look at every cost you have, and if it's not absolutely necessary for your survival, you better start cutting now. So I would give you the same advice. I would give all startups the same advice. Literally, you don't want to delay this, because the time you have corresponds directly to the money you have. So if you don't have enough money in your bank account to keep going, you're out of business. And in a black swan time, like it is right now, a difficult time, it can be often very hard to raise more capital. You cannot count on raising more capital. Now, that doesn't mean you should stop fundraising. It just means it will probably be a lot more difficult. And a lot of that will depend on your growth. So if your growth is still going and you are still growing and you have a lot of potential, then you can probably raise more capital. But like a lot of early stage companies, they haven't fully proven out their business model yet. They may still be in the R&D phase or the early launch phase. They haven't quite validated their product market fit. If that is the case, then you really need to conserve cash until better times so that you can just make it through this period and then sort of restart your engines. Now, I have personally been through 2 black swan times. So one was the financial crisis of 2008, 2009. But previous to that, I had another startup that was around right when the dot-com bubble popped and everything went down. So that was another time. And what I saw a lot of companies doing, and sometimes it worked and sometimes it didn't, is one of the things they did was some of them went into what was called hibernation. And that was literally, they did not have a long enough runway to make it through the bubble bursting. They did not have revenue. Things were really hard. All the venture capital was on hold. So what they did was they went into hibernation, meaning they laid off virtually everybody but the core team, and they waited until things improved. And then when things improved, they got back online and started rehiring people and raising capital again, almost as if from scratch, but not really, because they had made a lot of progress up to that point, but they didn't weren't at the point where their business was generating revenue and growing. So that's another option. That's your extreme option. And then there are other things that startups do in a time like this. One of them is to pivot, literally to reanalyze your business, to look at your business and say, what we were doing, we thought worked, but this is a hard dose of reality, and we have to be honest with ourselves. This business isn't going to make a lot of money. Investors, it's going to be a hard slog, and in a difficult time, we need to look for something else. So sometimes you pivot, do what's called a temporary pivot, and that's where you literally take your existing team and figure out a way to make money today so that you can be around tomorrow. And that doesn't mean that means you'll come back to your other business model, but you kind of put it on hold because it's not quite going yet. And if you have a team of engineers and let's say graphic artists, you could do contract work, you could do all sorts of different work with that team that doesn't necessarily directly correspond to the business, your core vision of the future. But you may want to do that. You know, I see startups here in Silicon Valley doing that right now. Like some of them are manufacturing respirators for hospitals. They're doing that and then selling those as part of their business, or they're sourcing masks from around the world and getting those into the system, or they're providing some other service that is really needed right now during this crisis, and then they'll go back to their normal business later. So you need to look at all the options. Remember, there's no option that shouldn't be considered. It doesn't mean you do it, but it shouldn't be discussed. And you, as the CEO, the most important thing is that you don't make all these decisions yourself. You need to go out to your core team and you need to engage them. You need to ask them, what should we be doing at a time like this? Like what do you think? Because you may have an idea, but you only can have so many ideas. One of your team might well have the better idea. And that's why it's good to involve them. But there's another benefit to involving them. It makes it feel like it's all of you are in this together. And that's the most important thing for surviving a really tough time. It's to know that your entire team is working as one to make it through this. It's not you alone and you telling them what's going to happen. They are responsible as much as you are for the fate of your company. If you can generate that sort of dynamic and that sort of feeling in your startup, your chance of survival is much higher. Remember, teams that really work together, teams that really communicate well, those are the ones who kind of pull through the hard times. They manage to come up with it. And even if they aren't, if they're fully involved in the fate of your company and they're committed, then they won't go off looking for other opportunities, even when things get difficult. But if they feel like they're sort of they're not in the inner circle, they're not being valued, they're not a part of these critical decisions being made for your company, then the chance of them sticking with you when it gets really hard is much, much lower. They're probably just going to go out and look for whatever they can. And you may lose some of your best people that way. One of the things I say when deciding who to cut, who not to cut in terms of employees, is you need to look at who you really need. What is the brain trust of your organization, that core part of your organization that will make the difference in getting to the next level. You need to do everything you can right now to keep those people on the team, to keep them involved and not let them drift away. It's really, even if they're working out of their home or whatever, you need to be on Zoom like we are now with your team every single day, talking about everything you can do to get your company to the next level. You need to have them all involved. You need to also think about compensation. You might not be able to pay them in cash anymore because the cash might not be coming in. I know with my business Founder Space, we've been doing incredibly well over the past several years. I mean, we expanded like crazy, opening up offices all across China and all these things. But this COVID-19 virus that's out there has really impacted our business. It has been, our revenue just dropped massively, and all because we work with startups and all our startups are affected, and it's really, really difficult. So at times like these, you need to look for how you can compensate your team in other ways. One way is to give them more responsibility, make them feel more involved, as I already discussed. A second way is you have a tool to compensate them that isn't cash, and you have plenty of it. It's equity. Remember, equity is only worth something at the end of the day, like if you sell your company. But if your company dies along the way, all the equity you have in the company means nothing, zero. That's what you get out of all your equity. It's not worth anything. What's worth something, though, are the core people, the people that are really instrumental in driving your business. And you may want to consider how to compensate them in equity during this difficult time so that they might end up with a much larger share of the company than if this black swan event, this COVID-19 virus didn't hit. But at the end of the day, they deserve it. If they stick with you, if they're really valuable, everybody should benefit. Now, you can look at examples of this historically, like Jack Ma, you know, the chairman and the former chairman and CEO, the founder of Alibaba. You know, Alibaba went through so many different iterations. They like went out of business and came back and changed their business model multiple times, on the verge of bankruptcy. They suffered it all. But Jack Ma was a great leader. Like, he totally involved his team. He made sure his team was 110% on board, and he wasn't shy about giving away equity. He didn't hoard his equity for himself. In fact, everybody said he gave away too much. But in the end, giving away too much, it didn't make any difference. He's still one of the richest people in the world. It didn't matter in the end. If your company succeeds, and all the people, those core people that were with him, stuck with him because he was a great leader. He was generous. They all owned a big stake in the company, and they went through those hard times and made it what Alibaba is today. So remember, if your company turns out to be big, you're going to have more than enough money at the end of the day. You don't need those extra shares if it can make a critical difference in your business surviving and actually growing even during times like this. So that's my advice.
So thanks. So kind of focusing on something you said about pivoting. I think a lot of companies are going to have to do that. You know, it's interesting. Before this happened, I just finished making an investment in a restaurant chain. Talk about bad timing, but they were smart. They pivoted immediately and they went to home delivery, and they've got a new, very cool technological way of doing home delivery now. So they're going to do just fine. Can you tell me a little bit about what you think what businesses people might want to get into now? I mean, what are good areas? What are growth areas? What are the opportunities here? And we've heard all the bad news. We've read the papers. It's depressing. But what are the opportunities, and what can a company do to make a little money these days?
Well, that's a great question. And you kind of nailed it. Like, this restaurant, it's like the perfect storm for a restaurant right now that's wiping out a lot of restaurants. But that restaurant looked at the market and said, wow, people are going to be eating at home more. They're going to not always want to cook. And how can we make it as easy and efficient and probably COVID-19 virus safe to get their food at home, like assure people? So you're looking at the market, and fear a lot of times drives demand, right? So people right now, it's scary, especially where I am, and I don't know where all of you are, but in San Francisco, you know, they're telling everybody, you know, shelter in place, which means stay at home, work at home. But it also means you have to go out to buy food. I mean, you could buy it from Amazon, or you could buy it from other online grocery sources. But even then, somebody's delivering your food, and you don't know if they're contaminated and who picked the vegetables and who touched it. And when you go to the store, it's all the same problems, but more. Anywhere you see a problem for consumers, you can step in to solve it. What you have to understand, though, is that some of these are short-term problems. So maybe by the time you come up with the perfect solution, people don't really care if their food is contaminated because the virus has gone away. So it might, you know, you have to consider, you know, what's short-term and what's long-term. And you have to do a balancing there. So you have to weigh out, you know, how much work is it to produce this solution? If I can produce it like quickly, if we can, like with the restaurant delivery, we can just put in place some policies and kind of use the marketing that we're being very safe. All our employees are wearing masks and washing their hands or wearing gloves, you know, and we're getting you safe food, and that ups your orders, but it's very easy to implement. That's a good idea. If you have to sit around and develop something, a program or software or, you know, a system that takes months, well, by then it might not matter that you have this incredible new solution to a problem that is then going away. So what I tell you to do is look at the market. There's so many in any time, in any place, people still need to buy all the basics. They still need to buy food. They still need to, get clothing. They still need to do business. They still need to, you name it, people, they want entertainment. So all of these things they want to learn, like you're online right now, all of these things are people still need, but they might need them in a different form. So we look at idea to IPO, my good friend Rob out there running these courses right now for you, he pivoted. Most of his business was doing events, but you can't do events in Silicon Valley right now. It's not possible. They're all shut down. So Rob has gone online and pivoted. Like, he's a great example of another person who pivoted. If, I'm telling you, you just need to look at the market, figure out the tools out there, and start to be creative about what you can do. I don't have all the answers. I know in my business, Founder Space, we have our physical spaces around the world, but people don't want to come into those spaces. They're scared, right? So they're working out of home. So we're doing lots of webinars. We're using tools like Zoom here in the US. In China, we use one called the Goose, some crazy software out there that is a webinar platform. In other countries, we have to use other things, but we're learning a lot of new tools now that we never needed to use previously, because we would just show up in person and work and talk and collaborate with our startups and with our investors and everything else. So we're doing that. In each business, what my number one advice to you, if you want to figure out an idea that nobody's thought of, and if I tell you an idea, and everybody will know it already, so it's not going to be so new that nobody has thought of it. If you want to think of an idea that nobody has thought of, there's one place you can probably get it, and that is, and it might be right just for you, and that is going to your customer. Go to your customer. So whomever your customer is, they are now facing their own problems because their business is being impacted by this virus, by the changes in the market, by their customers, and ask them, what problems are you having, my customer, and how can I help you? We are here to help you. What this does is a couple things. So number one, it keeps that relationship with your customer really close. So your customer knows you care. And that way, when things get good again, even if they aren't paying you right now, or they can't use your services for one reason or another, then they are still engaged with you. And when things return to normal, then you will be able to continue to have that relationship with them as a customer. Number two, it can give you ideas of new business opportunities that you might not have thought of yourself, because you don't know what they're going through. You don't know all the details. You can't. You're not them. But the fastest way to find out is to dig deep with them. So start like a Zoom conference like we have now with each of your customers, and go through their business and figure out ways you can help them. If you are my number one rule is, if you can help people, then and provide value to people, there is a business opportunity there. And that figuring out that business opportunity is the job of every entrepreneur. That's why you're a CEO of a startup, because you are supposed to do that. So if your current business isn't working, it's time to get back into figuring out what works.
So you've convinced me that cash is going to be important now for companies going forward. But given the current funding environment, and who knows what the investors are doing? I mean, is that money drying up? Who knows? What will make a startup fundable in this environment, especially one that doesn't really have traction yet? I mean, what can they do? How can they make themselves attractive to investors?
That's a really good question. It is, the companies that already have traction, meaning they have revenue growth, user growth, their numbers look good, they're going to still be able to raise money. It might not be at the valuation that we previously saw. Those were pretty high valuations. But, somebody's going to give them money because they have a real business and it's growing. If your business is plateaued, if your business is going down, if you are early stage and are, you haven't even figured out your business completely yet, then it's really, really tough. But you can get investment. You can always get investment, even in the hardest times. I have seen, I went through 2 of these black swan crashes before, and I saw startups raising money, even in the toughest times. Some of the best startups we see today came out of those times, like Google and others, Facebook. They came out of tough times. So uh, you, so there is a possibility there. Now, when you approach investors, I'm an investor, so I am, and Rogers, and I know we look at a lot of startups and help a lot of startups. When you approach an angel investor, an early stage investor, or a later stage investor, there's one thing you need to do, and you need to do it in tough times more than ever. And that is, you need to prove to them that your business has potential. It's not enough. In the good times, you can sell a dream. You can sell the future. You could say, oh, this thing is great. Someday it'll be amazing. What happens? We're going to make billions of dollars someday. And you don't have to have a lot of proof. But right now, and especially after companies like WeWork, WeWork raised so much money, billions of dollars, and many of SoftBank's portfolio, if you're looking at it now, sold a dream. They really didn't show that their business model worked. They didn't prove it out. They were just selling, hype. They're riding on the hype. Today, that isn't going to cut it. You're not going to ride you're not going to get very far on hype. You won't even get out your door. So if you want to get a meeting with investors today, you've got to really show them the data. And where does that data come from? Again, it goes back to your customers. The data comes from your customers. If you haven't sold, if you aren't in a position because you're so early stage to actually sell them a product, to get a product to them, well then, there are other ways you can prove to investors you have something. And that is, there's a very simple way. Get on a Zoom call tomorrow with your customers and get them to articulate why they need your product, why they're waiting for this product, what your product can do that none of the other competitors in the marketplace can do right now. And if they can do that clearly, you can actually cut together a series of these videos of customers articulating all the reasons that they are waiting and need your product. And you can send that to investors and they can look at that. And then that is data. That's real data. If those customers are credible, and the investor can call them up and confirm, and you could say, look, call any of these customers up. They're willing to talk to you, and tell them, here's the video. They're telling you on video. They'll say the same thing in person because they really need this product. And we right now really need the money to build it. That is one way. There are other ways of running experiments online. You can do all sorts of experiments right from your bedroom, where you might be right now because of this virus. You can get on, you can use Google AdWords or Facebook to target specific customers and show them a video of your product and get them to, or show them a sample website, a website that isn't fully functional, but where they can actually sign up for your product or even purchase it in advance, run a crowdfunding campaign, on Kickstarter or Indiegogo. All of these serve as proof points that there is demand for your product. And that's really one thing you need to show. The other thing you can show investors is if you have any core technology, you need to demonstrate the value of that technology to your customers. So what is the technology? How does it work? Why is this technology real? Why isn't it hot air? And what does this technology do? What can it do for your customers that none of the other competitors can do? So if you have lab data, if you're doing something in biotech or whatever, if you have software or patents or any proof of concept or prototypes that your investors can play with, the more they can get their hands on what you're doing, the more they can see what you're doing, the better. In a time like this, you may want to send them videos of your lab. Let's say you have a lab where you're working on hardware, like some robot. What can it do, right? If you could actually meet them, and you might not be able to, but if you can meet them and show them your robot or show them bring them into your lab and show them your biotech experiments, these them actually seeing it for real, seeing the tangible product that you're creating makes an enormous difference in their confidence. Remember, it's all confidence. Are the investors confident in you? Do they believe that you have something that in the future will be incredibly valuable, so valuable they're willing to risk their money, even in a time when money is scarce and people are afraid? You need to overcome their fear of basically losing their money with their fear of losing the deal. If they are more afraid that, wow, this deal is going to be so incredible, if I let it walk away, you know, shame on me, then they're probably going to write a check. And that's it.
You know, you said something really interesting there about core technology. I remember hearing you say one time a long time ago, and I've quoted you many times since then about this.
Thank you.
You said every startup needs a technical co-founder. It's really important. So and we're here in Silicon Valley where technology is very, you know, all of the startups we deal with are tech startups, I think. How important is technology? How important is developing new technology? Does it really matter that much? And tell me again about that technical co-founder. Did I hear you right?
You know, my core belief is that, you know, the startups that have the highest probability of succeeding in today's world, a world driven by technology, have as part of their core team a technologist. Because think about it, you know, every time a new technology comes into the world, the technology itself is just technology. But what it does is it opens up a door, like AI, for example, AI or the blockchain or whatever it is. It opens up a door to actually go in and reinvent businesses that have been around forever, that are money-making businesses, but to do something differently than they're doing it, or do it much better than these existing businesses are doing it. And that allows for a small company, a startup, that doesn't necessarily have a lot of resources in the beginning to actually gain a foothold and start to grow, start to steal customers away from entrenched players. Now, in order to do this, you know, if you outsource your core development to a third party, that may sound good because it could be cheaper. It could, you know, you don't have to have them on the staff all the time. But in a way, if it's your core technology, you are outsourcing the core of your business to somebody else. You don't own it. And also, it's, you know, anybody you're outsourcing to, at a certain point, they're going to stop working if they aren't getting paid. So people who work on contract tend to be cash businesses. They need cash, and if you don't have cash, then development stops. And I'll tell you, in a startup, development never stops. Like every time you think you're done with a product, and all of you entrepreneurs know this, there's always something that needs to be improved. There's always something that breaks. There's always some problem that needs to be fixed. And if you are relying on a third party, at a certain point, they may say, no, you know, you don't have the cash, it's done. I don't care if your website is down. I don't care if your whatever is broken. If you can't pay us, you know, we're a business. We can't fix it for free. So my answer to you, the best thing you can do is have at least a core technical team. It doesn't mean you can't outsource. Now, don't get me wrong, outsourcing is good. I actually am a believer you should outsource everything possible that isn't core to your business, everything. Like, you know, if you can save money and time and it's not core to your offering, and somebody else can do it better, let them do it. Like, you know, let them take that on, especially in the early stages where you don't have the money and resources to hire a full-time marketing person or a full-time, you know, so-and-so. You need, you know, outsourcing it to them is good. Now, that said, the beauty of having a core technical team that's fully committed is that if they have a big equity stake, like a technical co-founder we are talking about, it's their company. Even when everything else goes and there's no money, hopefully you and them, your partners in this, you'll stick together and you'll keep working on the product no matter what, and you will figure out a way. And any product I have seen, in order to make it great, and honestly, good products aren't worth anything. You have to have a great product in today's market. The world is just too competitive. If it's not great, nobody wants to, oh, I'm going to use the third best product. Why are you using the third best product? I don't know. It's the third best. No, nobody says that. They're always going to use the best product. So if you're going to make a product great, having somebody who's thinking about it night and day, not like you, night and day. How do we make this product better? How do we improve it? What can we do? If you outsource this, they're not waking up in the middle of the night thinking about your product, because they might have 20 things going at once. That's what outsourced companies have to do. So having that technical co-founder there in with you, shaping this product from a technical perspective, not just from a business perspective or design perspective, but a technical perspective, is really, really important. And if you do outsource your product, and it's your core product, and that is your only option because you can't find a technical co-founder or whatever excuse you want to make for yourself, what you need to do is find an outsourced company that will do it for an equity stake so that they become your partner. So at the end of the day, they are fully invested in this, and they will perform multiple iterations, because God forbid you should convince yourself that the first product you launch will be right. You're going to put it out the door and it's going to work. Because I will tell you, you will put it out the door, and the second it's out the door, you'll be like, oh my God, I have to make so many changes. Oh my God, we have to totally redo this, and maybe you spent all your money to get it out the door, and you're like, oh, what do we do now? So you need whoever is on board with you, you need them to stick with you, even when through many, 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 many more iterations than you can imagine before you actually get your product to the point where customers care about it.
Yeah. Okay, great. Speaking of technology and products that customers care about, we're going to be, like you say, this is temporary, what we're going through right now. We're going to be out of this soon, hopefully. So taking a little longer term view, what are the tech trends you're most excited about? What do you think the big opportunities are going forward, especially after we all come out of sheltering at home?
Sure. And we all hope there isn't a COVID-20 and a COVID-21 and a 22 on the way. So if COVID-19 is the end, that's great. I don't know where the first 18 were. I have no idea how they came up with that name. But let's assume this is the end, and you're thinking about the future of what you can do with your business, where the opportunities are. The beauty of technology, the beauty of the world, is that it never stops. Technology is always advancing. Even right now, in these times, there's new technology being developed. There's somebody in a lab somewhere at some university or even in their garage coming up with new technology that is going to totally change how we do business. So I always tell startups, if you are using yesterday's technology and not looking at tomorrow's technology, there's a problem, right? And also, don't get discouraged. Like, if your business isn't working right now, don't be married to your technology. Don't be married to what you're doing today. Like, every single day, there are thousands of new opportunities being born, and they are just sitting there waiting for some entrepreneur to find them, to pick them off the ground and run with them. So there is always a new opportunity for you to take out there in the world, and a new technology for you to exploit and use in a new way. Now, what you need to be doing is always playing with the latest technology. That's why, like, when you get this technical co-founder, or if you are technical yourself, you should always be downloading the latest software, the latest SDKs. If you're in biotech, you should be pushing the limits of your field, whatever you're working on. There's so much going on out there. I'm a big fan of CRISPR, the gene editing technology. It's amazing what people are doing with CRISPR. Just go online and look at it. There's so much people are experimenting with and doing everything from biohackers to universities to big corporations. They can restore sight now from blind people. All these amazing things that would have been just unthinkable, even a few years ago, are happening right now. Another big area, another big ecosystem that has been taking shape is the whole space economy. You know, outer space, Elon Musk going to Mars. You know, there's a Virgin Galactic and Blue Origin and SpaceX and hundreds of other companies out there launching satellites and doing all and tourism. But you don't have to be one of those big companies. Like a lot of startups think, well, you know, how can I compete with Elon Musk or NASA or any of these things? No, you don't have to build a rocket ship to go to space. You can build something that's tiny thing that's put on a rocket ship or that enables somebody to do something within that industry. So that industry is new. That means they're going to need a lot of custom solutions, and they're going to need special software. They're going to need special hardware. There's a whole industry surrounding the space industry of feeder companies, some of which can become very big and very important and billion-dollar companies in their own right over time. So you can get into that and figure out niches that could be pretty darn big niches where the big companies that are out there need support, and you can grow your business that way. AI, everybody knows AI. AI is like electricity. It's such a universal tool, can be applied to so many different business problems and social problems, and create so much value in so many different industries that the possibilities are still numerous. There's still numerous possibilities for AI. The algorithms, the deep learning algorithms are out there. Most of them are in the public domain. You can download them and start hacking them and applying them to virtually any problem you see in the world that you think it could be applied to and make it better. There's brain-computer interfaces out there, another exciting area, another exciting technology where they're actually being able to, Elon Musk is talking about inserting chips in the brain, but there's a lot of them that are non-invasive. You don't have to, use a laser and open up or drill and open up your skull, which most people don't want to do. There's EGG technology and many other technologies out there that are non-invasive that you can use to create products and services, and those are getting better all the time. There are, fintech, blockchain, all these things have gone through many iterations already. Huge amount of activity there, especially over the past 3 years, but that isn't tapped out. That's still there. I'm personally a big investor and a big fan of SaaS-based startups like Zoom. Like Zoom is SaaS, software as a service. It's a great area to grow. I don't see it ending. Wherever there's new technology, there's always room to offer new software as a service out there on the web, in the cloud, big area for growth. And, as Roger was talking about, the whole food industry, the food tech industry, booming right now. People are much more open to experimenting with new brands of food. People are using new technology to make food in a better way, to distribute food, to all these different things. There's more opportunities now than there ever were before. So there may be a little less money for a short time, but that money will come back in a wave as we exit this difficult time, and people will be looking for those companies that have made headway. And the beautiful thing, and if there's any silver lining to the cloud of COVID-19 and the virus, it's that it will weed out the weak players. The strong players will make it through. If you're a strong player, you make it through, you use this time in the most valuable way possible. Maybe you put your business on hold because it wasn't quite where you thought it would be, and you you have that moment, the come to Jesus moment where you say, I understand. My business was never going to be a huge business. I'm going to put it on hold, and I'm going to use this time when I'm trapped in my house to actually start researching new opportunities, to going into new technologies, to figuring out what I could do next that has an even bigger chance. Never, never, never be wed to what you did in the past. What you did in the past is in the past. It doesn't matter anymore. All that matters is the future. Remember that. And that will free you up to always take the best opportunity at any given time.
Yeah, sound advice. So, we're all kind of, at least here in the San Francisco Bay Area, we're kind of locked in place. But tell me, you have, I think you said 21 locations around the world. What's going on internationally, especially in the startup space? Are they having the same issues we're having here? And again, longer term, what's going on internationally in terms of, I guess, trends, technologies, opportunities? Is there another Silicon Valley being built out there while we're all at home? What are you seeing?
There are many Silicon Valleys being built out there. So, I've spent a lot of time in Asia, a lot of time in China, South Korea, Taiwan, Australia, all these different Malaysia, all these different countries looking at their startup ecosystems, collaborating with investors there and entrepreneurs there and the governments very closely. And I will tell you, every major country has opportunities. Doesn't matter if you're India or Indonesia or South Africa, or recently I was in Latvia, of all places, in the Baltic states. They're all innovative. I saw some amazing startups in Latvia. It's a tiny country, 1.5 million people. It's tiny, but they have really good universities there. I went to several of their incubators. I met a lot of their startups. I talked to the government, which is investing a lot. I'm scheduled to go back next time to Lithuania, another Baltic states country, and work with them. Now, I will tell you, it doesn't matter how small the country is, there are entrepreneurs there that are pushing the envelope, that are doing things that aren't being done in even some of the biggest market. So there are miniature Silicon Valleys or miniature ecosystems and very large ones like you'd find in Shenzhen, where we have our incubator and we do a lot of business, and in Beijing, where I do a lot of business with my partners. Those are big, giant startup ecosystems that rival Silicon Valley in every way possible, in terms of capital, in terms of the number of startups, in terms of the number of unicorns. They're all out there. But then in the little countries too, just because you're in a small country doesn't mean you don't have access to big markets. So like the Baltic states I mentioned, they're tiny, but like those countries, they have access to the whole European market. And Estonia especially, they were the first one to really take the lead in modernizing their whole system. And they made it so easy for anybody from anywhere in the world to come to, the Baltic states, Estonia, set up a business there remotely, not even ever set foot in Estonia, but then have access to the entire European market. And they gave them, this e-citizenship thing. They gave them special tax breaks where all the money they basically make, if they invest it back into that startup ecosystem, they can benefit from it. In China, our incubators there, the Founder Space incubators, we have we have startups coming from all over the world to enter the China market, which is, the biggest market in the world. It's amazing. And we have support, government support to help them with loans, help them with money. And we have a huge venture capital network there for funding these startups. We have a very large fund set up in China just for funding Chinese startups and any startup that wants to set up operations and do business in China. So all of these are great opportunities. I think a lot depends on your product, upon your target customer, upon your team's core expertise, which opportunities you take, where you think you're going to go. Every country has different pluses and minuses. China is a huge market. You can make so much money, but it can be difficult for foreigners if they don't have good support from local partners and local venture capital, and have Chinese, bring Chinese as part of their core team that really understand that market and how to grow that business and give them the freedom and autonomy to actually do that. These are all critical decisions that affect your chances of success. So, and every market is different. As Founder Space, we probably help the most startups. A lot of overseas startups come to Founder Space here in Silicon Valley because we're here and they want to enter the US market, which is, an amazing place to be. It's so open. People here are here from all over the world. And I tell entrepreneurs, think carefully about what market you want to go into. But the most important thing to remember, wherever you are in the world, is start at home. Start in your home market, figure it out as much as possible, push your product to the limits of your home market, get real validation, and then come into other markets. If you just come to the other markets before you have anything solid, it's hard. It's hard to get traction. I mean, it's first of all, it's hard, like even if you're coming to the US, to get a visa and to stay long enough to make something happen. But you can get a visa like in the US. We have special exceptions. If you raise enough capital here, enough angel funding, you can get a visa to work at your own company in Silicon Valley. You know, at Founderspace, we hook a lot of people up with that opportunity. And I just want to say something right now to all the entrepreneurs out there. You know, during the time of COVID-19, we are especially concerned about helping entrepreneurs all over the world figure out how to leverage capital in Silicon Valley and opportunities here. And we have created an online startup program. Normally, we charge for that program a good amount of money. But right now, if any of you want it for free, we're giving it away for free, because we're giving it away for free to entrepreneurs because this is a tough time. We want to help you survive. Reason I'm mentioning that is because we also give you a startup kit, and in that startup kit are a lot of the things I've been mentioning, like they are lawyers, like Roger's in there. Roger's a great, one of the most amazing lawyers I have ever met, and I'm not just saying that because he's a friend, but because I actually use him and I recommend him to all our startups. And the reason we have these lawyers in there that you can go and we vetted them already, and you can go and look and contact them and ask that if they're a good fit for what you're doing. We have resources on housing. We have resources on putting together your business plan. We have resources on fundraising. All of these things are in our startup kit. And then we also have like 3 months worth of videos that you'll get. So go to founderspace.com. You'll see our online startup program. Click through to the contact us button and say, Captain Hoff, that's my nickname, Captain Hoff said I could have it for free for all of you tuning into Idea to IPO. You get it for free from us. So you just send us your email address and we'll sign you up and you'll get access.
So let me ask you about that. Tell me about, what does an accelerator program provide to a company? Why is that a good thing? And I mean, as I listen to you talk, it seems so complicated. There's so many things that you have to know. You know, where does a person go for all those resources? Is that what your program does?
Yes. So let me say this is probably the last question before we'll go on to your questions, because we've got to hear from you, all of you out there, what you think. So Roger can start to dig up some questions now that he'll ask me from the audience. But I will tell you, accelerator programs can be great, right? If you get a good program, it can be really beneficial, not just in terms of the capital, but in terms of the relationships. Like when you land in Silicon Valley, especially if you're from overseas, you don't, most likely you might know a couple people, but you don't know a lot of people. You don't understand how the ecosystem really works. You got to be here to do that. An accelerator program can accelerate you in learning that, in making all the connections and introducing you to everybody. Now, we try to do some of this in our online program, but it's never the same as being here in person, right? So in the online program, we do introduce you to a lot of resources and stuff, but you still have to meet them remotely, which is always a challenge. It's much better when you're here in person. And that's what accelerated programs here and the ones we run in China and throughout the world, Australia, other places, that's what they're designed to do. They're designed to give you face-to-face. It's also, unlike our online program, which, is a one-to-many, it's like a broadcast, so you don't get that individual attention to your business that you get in a real accelerator program. Our goal is to hook you up with our instructors, myself, our mentors, our pool of mentors, to actually really go through your business in detail and address the actual problems you specifically are facing, the challenges you are facing, and helping you overcome those. I will tell you, usually what people get out of the accelerator program is not a lot of money. The money isn't the most important thing. The money will come if you figure out your business. The help that accelerator programs give is figuring out your business, is making sure that the path you are on is the right path, and the decisions you are about to make in the coming year will be the right decisions, because even a single wrong decision at an early stage can kill your company. It can kill you. It's hard to recover when you go down one path and it's the wrong path and you realize too late you should have been doing something else. So from our experience from working with so many startups, people like Roger and myself and the mentors we have, we've seen it. We probably haven't seen it all, but we've seen close to it all. So the advice we give you, the guidance we give you, the relationships we give you, those are the things that matter the most.
Okay, great. Yeah, so if you do have questions, for those of you who joined late, you have a dialog box at the bottom of your screen. It says Q&A, a little chat symbol icon. Go ahead and type your questions in. And we're close enough that I think I will turn to some of the audience questions now. Here's one. It says, how much equity are investors looking for in a startup with no traction and with traction? It kind of raises this bigger question about how much, how do you stage a financing, and how should a company know how much money to take and who to take it from and how much of their equity to give up?
Well, let me tell you the general rule in venture capital in Silicon Valley. And if it's a major venture firm, not an angel investor, but a major venture firm, each round is usually comes in around, they expect it to take 20% of whatever equity there is. So, and this is true all the way into the later stages, from, Series A onward, but it can also be true earlier. It depends. At an early stage, people don't really know what your company is worth. You don't know what your company's worth. Even later, it's hard. It's a guessing game, as we've seen many times. Companies are overvalued or undervalued. No, there is. The thing is, it's not a fluid market. It's not like the stock market where you know what a company is worth at any given point in time because there are enough people trading it that it's clear, right? But there's not a lot of trading going on of your shares. There's not a big marketplace for your shares. So the value is kind of relative to what people are seeing of other startups. People are seeing of similar startups that are out there right now and what they've paid for those. And the more experienced the investor, the clearer the idea they have of what your company is worth. So the best way for you to figure out, what is my company worth in this market, is to talk to a lot of experienced people like Roger. He can tell you, like, right off the bat, he's done so many of these deals. People like myself, people like Rob, who run, Idea to IPO. All of us, we've seen a lot of these deals. We can probably give you a better idea about what your company is worth, but we're one data point. And since there's, we don't understand everything about your company, you need to get a lot of data points. The more data points you get from the more different people in the industry, the better idea you'll have what your company is worth. And remember, what your company is worth in Silicon Valley, the valuation in Silicon Valley, and the value in New Delhi or the value in Luxembourg or Beijing is totally different. They're different markets. The investors there are different. If you're raising capital and you're in Riga, it's going to be totally different than if you're in San Francisco, because the investor, and there'll probably be a lower valuation there than it will be here. The valuations in the big cities where there's high concentrations of capital and a very active startup ecosystem, the valuations tend to be much higher. So one of the, if you're coming, let's say, to Silicon Valley, you want to figure out how much your company is worth, get somebody who has an investor account on a site like AngelList, a crowdfunding site, and they can see the value of all the different startups on the site. All the values are posted, and you can pretty quickly go to a lot of companies that are similar to yours and start to see the value, which is always changing, by the way. It's different this month than it was 6 months ago, that's for sure. The values are always changing, but you can go on at any given point in time and look at the valuations of the companies and then start to get an idea of what they're worth and how to price it. Now, for you at a very early stage, I would say, don't even try to price it. Like, it's too hard. Like, what you need to do, you can't do this in all countries. You can't do it in China. You can't do it in a lot of countries. But what we do in Silicon Valley are convertible notes, or the equivalent of convertible notes. They come under many different names, but they basically can allow you not to specifically value your company, to get money from an angel and say, we'll let later investors that come in after you, when we have a real institutional investor, like a real VC, they will determine what value the company is worth. Now, in these convertible notes, you can give the startup, you can give that early investor some advantage. Now, you may give that investor a discount, like a 20% discount. So whatever other investors come in later, they get it 20% cheaper because they took a bigger risk. They came in earlier. If they're a sophisticated investor, they're going to demand that you have a cap on the note. And what a cap is it's actually setting the maximum valuation, which usually, if you're at all successful, is the valuation. So in that case, you can't really avoid a valuation. You have to pick a number, and you have to negotiate that cap. You know, is a cap of 5 million pre-money valuation? Is it a 10 million pre-money valuation? Is it a 2 million pre-money valuation? A lot depends on what stage you are, what technology you have, what team you have, what sector you're focused on. I can't give you rules because it's different for every company and every sector and at every different point of time. But getting that data, that feedback on what your cap should be, which is basically, you can think of it as your valuation, is getting much feedback as early as possible, the best thing you can do.
Yeah, good point about the convertibles and this other instrument we call a SAFE, a simple agreement for future equity. So if your company doesn't have traction and you're that early, that's probably what you're going to be doing. You don't want to give equity away because you just can't value the company. If you do, you'll value it too low. Be careful about the cap. I see so many companies, they don't pay enough attention to it. And then they become very surprised when they find out just how much of their company they gave away for small amounts of early money. Here's another question. Again, this is for early stage, no traction. The question is, selling a vision to investor relies on how solid the customer data is and how well the vision is articulated. The question is a good hypothesis validation and great salesmanship enough to get you a check if you try hard enough?
Well, it depends what you mean by hypothesis validation. So if you mean you can come to them with real proof that your business works, that you've discovered a product market fit that offers something unique that's much better than any of the competition has, yes, you can raise money. Will good salesmanship help? Yes, good salesmanship is absolutely not essential, but it is, you can still, even if you're a bad salesperson, you can still get funded if you have a great company and great numbers and everything else, but it never hurts, honestly. It's a people business. When you sit down with an investor, they're looking at you, the person. They're saying, can this person create a billion-dollar company? Can this person make me rich? If you can't sell them that you are the type of person who can deliver on what you're promising, then they will be less likely to take the risk. So I would say the psychology of sales, being able to present well, having a really well thought out, clearly defined, articulated case, and a great PPT, great videos, great supporting materials, all of it matters. People like to say, don't judge a book by its cover. But they say that because everybody judges a book by its cover. So whatever your PPT looks like, whatever your business cards look like, whatever your website, if an investor goes to you, if they look crappy, then they think wow, you can't even build a decent website? Why should I give you millions of dollars or hundreds of thousands of dollars or even $1 if you can't even get somebody to build a halfway decent looking website? Or if your PowerPoint looks like it was created by a 3-year-old, why should I give you my money if you can't execute on these simple things? Why should you be able to execute on something much more complex, which is a whole new business? So the simple pieces, the exterior, the shiny car, the shininess of what you're offering makes an enormous difference. I have seen startup founders that literally created, a kick-ass video, an amazing video, and that was enough to get them venture funding. That did it. They were like, the video itself, people got so excited, they gave them money. And now this isn't hard to believe, because ask yourself, when you go on Kickstarter or Indiegogo and you look at those videos are probably most of the research you do. You probably don't go beyond those videos. You're just like, wow, that's a great video. That looks like a really cool product. Okay, I have the money. I'll take a risk, So, think about all the materials you do. Make sure they're all great. If they aren't great, if they're just mediocre, then your company is going to be perceived as probably mediocre, unless you have stellar data, like I said, stellar data to back it up. But why not put stellar data together with a stellar presentation? You'll get a higher valuation.
Here's one of your fans who read your book, Make Elephants Fly, and notes that you were big on using open source tools. Publicly available APIs. This person, for the product they're working on, they had to develop some high-level APIs for various reasons. They thought they'd be better off building specific tools essential to the product. How often do you see cases like this, and what's the advice on developing in-house IP versus using open source tools?
Great question, and thank you for enjoying Make Elephants Fly. I appreciate your saying that. That's really nice of you. So I am a big fan of open source, and I'll tell you why. I'm a fan of anything off the shelf. Like, it doesn't even have to be open source. It could be like anything you can use that will make it faster, less expensive for you to test out whether your concept, whether your idea that's in your head actually works in reality. You should use at the beginning. Remember, at the beginning, the hardest thing to do, the most important thing that you should be doing above all else, above fundraising and all this other stuff we talked about, is figuring out whether this new idea you have come up with is actually works in the real world, right? Because there's so many ideas. I come up with a new idea every day. I'll tell you, I'm that type of guy, like many entrepreneurs, like many of you. But most of those ideas are crap. They aren't very good. They're just good in my head. When I think of them, I'm all excited. But when I go into the real world, as soon as you take them into the real world, you figure out all the problems they actually have. So I don't want to see you spending, 6 months, a year, or even 6 days building any software that you don't have to building any part of your infrastructure for your organization that you don't need to build. Because if you can save those days and get that initial version of your product out into the marketplace and figure out, wow, these are the problems, this is what I didn't understand, and then start iterating on those, the faster you, and hopefully come to the point where you conclusively determine this either works or I'm going to abandon it and go another direction. The sooner you do that, the better. Because put it this way, all you're doing is running experiments at the beginning. You're just running one experiment after another, and you want to run those experiments as quickly as possible. And the reason I like open source is because you can pull it down. It's open, so you can actually start modifying it and doing whatever you want to with it, depending on the license. Read the license. More open is better than closed, but even closed, anything you can pull down and start to figure out what's working and what's not very quickly, you can always, I guarantee you, go back and build your own. You can always build your own custom one to replace it. You can do that. Once your business is working, once you've raised money, once you're gaining traction, you can, on the side, in the background, be building a much more robust, a much better version. I've worked with engineers, and engineers, I'm an engineer. I studied engineering, electrical computer engineering back in the day. So I know the mentality, and I suffer from this too. Engineers always, they want to make it perfect. They want to make it scalable. They want to make all these things. Don't worry about that. Just get it out there. Get it out there tomorrow if you can get it out there tomorrow, or the day after, but don't waste any extra time building writing one line of code that you don't need initially.
Okay. So here is a question from somebody, I believe in Japan, who's been working with companies that are trying to go public. And he's wondering, as an exit strategy, do we think the IPO is going to be a viable exit in the future, given the current situation? Should people be working towards that?
Yeah, there will be more IPOs in the future. Absolutely. They're on hold right now, which is understandable given the volatility of the market and the world economic situation, but they're coming back. So don't worry, there'll be plenty of acquisitions, plenty of IPOs ahead of us.
Well, consistent with that, we talk a lot about venture capital, but I wonder if you might say something about alternative forms of raising money, because I think a lot of companies are going to have to look for something other than venture capital, right, to raise cash.
Oh, absolutely. So, there's a lot of places you can get money, and the best place to get money tends to be from large companies. So if you have large corporate customers who can actually fund your business, it's a great way. So, if it's a large company like, I don't know who you're working with, Microsoft or Bosch or, Procter and Gamble or whoever this big company is, huge company, you can go to them, ask them what problems they're having. You have a team, you can figure out, you can build something for them where you own the IP. That's how I started my first venture funded startup. I actually went to Viacom, MTV. They needed a platform. We built it for them, and we got to keep all the IP. So, and they paid us $500,000 to do it. So that's how I got my seed funding. And you can get your seed funding in a similar way, is to, just figure out somebody who desperately needs something, and then that could turn into a big business. And even if it doesn't, it can get you through a difficult time. You can get money from professionals. So, if you're doing a medical product, doctors, they tend to sit on a lot of money. And if you have something that they can understand, that they see the value in, they might be the early adopters to give you the money to make it. Dentists, I know a lot of people who've done dental startups, and they've gone to dentists, got a lot of money. Lawyers like Roger, if you're doing legal tech, and he sees the value of what you're doing, he might be a perfect early stage investor for any legal tech, because he knows if it's useful or not. He can, and lawyers tend to make a good money. I don't know about Roger, but he's probably doing pretty well. There are always people out there. Tend to look for people in professions that correspond to what you're working on. People who in those professions tend to make a decent amount of money, so they have the extra money to invest. Corporations, customers, people like those are the best sources of money right now. Friends and family, asking them to take a risk in a difficult financial time, probably I would avoid it. Like if you can't get a qualified angel investor, or if you can't get somebody who understands your business inside and out to invest, why should you take money from your friends and family who are really just being nice to you? They're not validating that you have anything, and you're taking a huge risk with their money, which could, in the long run, really jeopardize your relationship with them. And I personally done many startups myself, 3 venture funded, 2 non-venture funded. So I've been through it. I never took a penny from friends and family. I never did it. And I'll tell you why. Because I felt, like I just told you, if I can't get professionals to invest, people who understand the industry, then I probably don't have anything. And I'm probably squandering their money. And I'm risking that really personal, deep relationship I have with them. If they want shares in your company, you can give them some shares. You don't have to take their money to give them shares. You can give them a small amount, make them an advisor, make them an emotional advisor if they can't provide any technical or business advice. Give them a little shares, allow them to participate and feel good, but don't take their money. That's my advice.
On that, we got the CARES Act now, so there's a lot of government stimulus that's allowing the SBA to make loans, and previously startups just couldn't get loans. First of all, you hadn't been in business long enough, you didn't have revenue, and that money is going to be available, $350 billion in this package. There's payroll protection loans that startups can now qualify for. Sometimes you have to give collateral, but that can even be waived if there's no collateral. That's really something to look into. Every startup that's been around a year should look into government money and government stimulus, because if this coronavirus is affecting your business, that is a viable option that wasn't there before. SBA loans, which are forgivable, by the way. They can be forgivable even, so it's like free money.
When are they forgivable? That's what I read about it, but I didn't understand.
Yeah, so for like a payroll protection loan, you can forgive up to the first 8 weeks of your payroll and not lost profits, but payroll and extra expenses because of Corona. And I believe starting, I think next year, because this goes to the end of the year. So
okay, great. That's really good advice. But it only applies to U.S. startups, just so you know.
Right. Absolutely. I want to stay on that topic a minute because I'm kind of curious myself. How do you feel about other things like crowdfunding, crowd financing, ICOs, token sales, all of these other things? Do you view that as a positive thing for a company?
I do. I'm a huge fan of crowdfunding, crowd financing. There are so many platforms out there. I mentioned AngelList, but there are, hundreds of different crowdfunding and and crowd financing platforms in different countries all around the world. And I strongly encourage you to look into them. Many of them can be the difference between life and death for your startup. So don't go out to different ones, ask people who have tried them. That's the first thing. Before you waste your time, like go to people, and you can't just read about the success stories on their site, because a lot of times they just show you the few that succeeded. You need to talk to like other people who have normal startups like you who've tried them and find out how much success they had. Now, given this, you still need a compelling case. You still need something that people can understand, relate to, all the materials that you're using to pitch. If you're going on the crowdfunding sites like Kickstarter and Indiegogo, there's a massive, as we all know, a massive number of people on those sites in terms of selling their products. So it's so easy to get buried on any of these sites. It can be very frustrating because you can put in a huge amount of time and effort. And I did a crowdfunding site for in the early days, the very early days, for a game I was working on Kickstarter, and it required a lot of time, and the game, and it didn't get that much traction. So I will tell you, you have to know what works on different platforms. There are certain types of games that get a lot of traction, other types that don't. There are certain types of products, like especially gadgets and hardware products and things like tangible products people can hold and buy. Those gain a lot of traction on crowdfunding sites, and software, not so much, So it really, you have to have the right product for the right platform, and it pays to do the research in advance, meaning going onto that platform and looking at similar companies with similar products and finding out how they did. How much did they raise? And then doing the calculation in your head, is it even worth my time? Because I will tell you, 80% of the time it won't be. Like 80% of the time, you just going on a site, scattershot, like going on all these different sites and putting up crowdfunding will probably yield nothing. Because first of all, you won't run any of the campaigns well. It's really, really hard to run a good campaign. It's not easy, and you won't be on the right sites in the right way. It's better to go deep. Pick one or two of these sites that you think has the best potential for your type of business. Do a lot of research, a lot of planning. You need the whole marketing engine ready to go. You need to reach out to bloggers, everybody else. And only then, when you are like so sure this is just the right thing for this platform, and you have everything lined up, a big campaign with all your customers, all the people, you have a network that will actually go out and promote this all across the internet, that's when you pull the trigger.
So I want to come back to something else that occurred to me as we've been discussing just how tough things are going to be, and that's more of the personal side of this. I mean, startups has always been kind of hard on people personally. It's hard on relationships. It's hard on marriages. Probably even more so now that we're heading into this sort of difficult time, especially with sheltering in place. I mean, you've been through what, 2 or 3 startups yourself. I mean, and you've seen thousands more. I mean, how do people keep their personal relationships and their personal lives from suffering when something like this happens?
Wow. Okay, that's a really important one. It comes down to balance. If you need 2 things, right? One is you need to balance your life out, and 2, you need so that you're not spending all your time working. Remember, just putting more hours into your company won't save you. It's never enough. Because if you're putting in more and more time, but you're putting it in on the wrong things, you're focused on the wrong things, your business fundamentally isn't working and you're not addressing those, then it doesn't matter how much time you could put in. You could work 24 hours a day and never sleep for the next 10 years. Your business will still fail because it's going the wrong direction. So just time isn't enough. What you need to do is you need to think carefully about where you put your time. And then you also need balance, because if your personal life is falling apart because you're neglecting your family, you're neglecting your friends, you're unhappy, you're totally stressed out, that's going to come back into your business too and have a negative effect. It will not allow you to think clearly and make the right choices. It won't allow you to deal with your employees and your clients and partners well, because you'll be told you won't be happy. It'll be miserable, and those things manifest themselves in your decisions and in your behavior, and then they come back into your business and corrupt your business. So I always say, any relationship, you only get as much out of a relationship as you're willing to put into it. That's the bottom line. It's true of your business. If you put a lot into it and you really care, you're going to probably get something out of it. It's true of any personal relationship. So whether it's a boyfriend, a girlfriend, a husband, a wife, your kids, if you don't put anything into them, those relationships are going to suffer. They're going to atrophy. It's not going to be. They're not going to continue on. And in the end, you may wind up getting divorced. You may wind up with just a lot of unnecessary pain that you didn't have to go through. So my advice is, when you're thinking of your life isn't just about your business. It's not just about making money. Hopefully it isn't. Hopefully there's more to your life. Otherwise you're a very one-dimensional person, and I think it'll be very hard for you to be happy in that life. It doesn't mean don't work hard, but it means taking the time out of every day and spending that time with the people that matter the most to you, and thinking of that as investing not just in them, but also it comes back into your business, right? It comes back into your soul, into your heart, into who you are, and comes back into the quality of life you have, and everything touches everything else. So people need good relationships with other people to be mentally healthy, to be physically healthy, because your mental health affects your physical health. And to neglect that, it will only wind up hurting you as an entrepreneur and as a person. I will tell you, I made some bad mistakes early on in my career by being too obsessed with my business. It took me time to find balance. And when I did, I am a very happy person now. Like, things like COVID-19 can come along and totally derail my business, and I'm still like, oh well, I've been through worse. This is what happens. I have a pretty balanced life. I work very hard because I'm naturally an entrepreneur, but I love my work, and I spend a lot of time with the people I care about, and I feel very good about both of those. And that allows me to weather a storm that might otherwise quite depress me, might otherwise cause me a lot of anxiety. And I encourage you to do that too. Put as much work into yourself and your relationships as you do your business. If you can even those out, you'll come out ahead.
Okay, thanks. So use the Q&A box if you have questions. There's one that came in through chat. I say it's not a good idea. I was told it's not a good idea to take money from big companies, because they might steal your idea, take your idea, and not give you credit. Even if you take legal action, they have deep pockets, and startups can't really, sue big companies. What are your thoughts on that, Steve? Because you had talked earlier about going to your customers and going to the big companies and maybe getting some NRE from them or something like that.
Okay, I will let this be the last question for today. Okay. And then we'll wrap it up. But I want to answer this well, because I get asked this quite often. So the bottom line is, most big companies, they can't even execute on the ideas they have. They can't even do, I work with, FounderSpace works with big corporations all over the world. We do consulting work with them all the time. And we and we train them too on innovation and other things. And when we work with them, I constantly hear they can't even execute on their own ideas, let alone a startup idea. No, you do not have as much to fear from a big company as you do from another startup entrepreneur stealing your idea. That's your bigger risk. But in the end, you can't be afraid to go out with your idea. If you are afraid to go out with your idea, you will fail. You need, and it doesn't matter if it's engaged, those big companies can be your customers. Those big companies could be somebody you're raising capital from. It doesn't, big company could be running an incubator. It doesn't matter. Don't be afraid. The idea is just the beginning. It's the starting point. It's the beginning starting point. At the end of the day, there's a huge amount of work to be done, as any entrepreneur knows. And them stealing the starting point, whether they actually bring it to fruition, very unlikely. Especially if you're already doing it well, they're more likely to partner with you. Or if they really, really need it as part of their core business, they're more likely to acquire you than to attempt to do it themselves. That is, the odds are in your favor. And if you're on their radar, by actually having taken an investment from them, the chance of them acquiring you is much bigger, right? Or having gone and fundraised with them, because then they know about you, they know what you're doing, and they're likely to be in a position to actually sell it up the management chain and make a decision that they either need to use your products or services, or they need to buy you, or they want to invest money, or whatever it is. So I always say, don't isolate your idea. Don't hide your idea. You need, in order for any idea to succeed and flourish, it needs to be in the real world. And then going into the real world means exposing it to lots of people. And some of them may try to copy it, but you can't worry about it. All you can worry about is how fast you're moving and your own execution, how well you're executing. At the end of the day, you don't want to show them your hidden secrets. Like if you have trade secrets, your source code, things like that, you're not going to give that to any potential investors. You're just going to go over the surface level. So in your business plan, if you're really worried about them if you're super worried about them stealing it, if you think they are absolutely going to steal your idea, of course, don't show it to them. But most companies aren't like that. If you're a little worried, then just don't put anything too critical in your business plan that could be of so much value other than the idea. And remember, ideas are a dime a dozen. There are probably 20 other people, if it's a great idea, who have that idea right now off in Norway and Nigeria and China or wherever they are, who are working on the same idea at the same time. Worry more about those people you don't know about than the people you do know about. So I'll leave it at that for my last answer to a lot of great questions. And I want to thank you all so much for tuning in.
Well, thank you, Steve. That was really interesting. It's always educational. I love hearing these. I want to remind everybody that Steve's going to be back here again tomorrow for a panel that we're doing at 12 noon tomorrow through Zoom. It's a webinar through Idea to IPO. It's an investor panel on COVID-19 and the health tech investment environment. So take a look at the details on the website, ideatoipo.com. And I know if those of you have any questions that you'd like to follow up with, Steve, how do people get a hold of you?
Just go to founderspace.com, click on Contact Us, or you can email Founderspace at VC, stands for Venture Capital, VC@founderspace.com.
Okay, and those of you who would like a recording of today's webinar, just go ahead and shoot me an email, or Royce at rroycelaw.com, and I hope that we see you back again tomorrow at noon. Thanks very much.
Great, thank you, Roger.